Hey everybody, Boris for VK Forex. Welcome to the commodity dollar update for August 21 to August 25, 2017 for Aussie dollar, dollar CAD, and Kiwi dollar. And I think the story in the commodity dollars has been what it's always been for this last month and a half, which is the low volatility trade with, again, to me, a smaller failure. In other words, I'm strongly forecasting that dollar comes back this week. Dollar comes back, of course, across all spectrum if the yields in the U.S. begin to rise. That's really the genesis of my thesis. You need to have the yields, of course, just come off the floor. If U.S. yields do rise, that certainly takes the carry back, meaning the carry trade sort of dissolves a little bit against the dollar as interest rate differentials go dollar favored. And that creates the potential downside moves in the Aussie, in the Kiwi especially. But whatever happens, I don't imagine the move is going to be significant. So whatever small movements we have, it's very likely that the movements in the commodity currencies are going to be small as well. One of the things that happened last week is actually kind of interesting was all of this risk aversion flows with the terrible news out of the U.S., with still the North Korea threats, all of those things kind of dissipated. And that created a relief rally in some of the calm dollars because, of course, they also trade, aside from just interest rate differentials, on just risk premium and risk aversion flows. But at this point, again, I think the risk rally has kind of done its task, and it really is going to become much more of a yield rally. If U.S. yields can begin to come off the floor and just rally back up even to the 230 on a 10-year, just on mild investor optimism, that creates the potential for a little bit of profit taking in the Aussie and the Kiwi. But I think the net takeaway here is that whatever happens, it's going to be a very, very, very small movement one way or the other. We don't have anything on the calendar. The calendar, as far as the calm dollars goes, essentially is the Kiwi trade balance, which is a 5-minute event in the marketplace, and a couple of Canadian. We have Canadian retail sales coming up on Tuesday, which will have a little bit of an impact. Of the calm dollars, of course, the Canadian dollar itself is going to be much more volatile than anything else. We had this massive rise in oil on Friday that helped the Canadian dollar strengthen itself out. It's always going to be the much more volatile of the two. I think Aussie and Kiwi, it's not inconceivable to think of them as moving 75 pips total this whole week as we go forward. So looking at the levels on the calm dollars, Aussie still very much a 78, 80 trade, but to me this is sort of a sell towards the 80 level. Dollar CAD trading a little bit better, but I find it incredibly difficult to believe a dollar CAD could break the 24 support level. So it would be a buy anywhere near at this level, unless you have some ridiculously strong move in oil that takes it to 55, that we have some sort of exogenous shock, which is very unlikely. And Kiwi still held the 72s. Looks relatively good towards the 74s, but certainly very much a sell towards the 74 level. Let's take a look at the charts here and just see how everything sets up on the dailies. So yeah, up, down, nice big bounce off the 78s, which we saw to be the support. Is this a sell? Probably it's the intelligent sell here is probably into the 80s. I would just wait. One of my more favorite ideas this week, and I'll discuss this in the crosses, is that I think there'll be a relative strength to the calm dollars versus the majors. And where the profit taking is going to be most severe, if it does come in to be profit taking for the dollar, it will be in the majors. So selling the majors against the calm dollars will probably be the more intelligent trade. So there is, I think the sort of the net takeaway I'm trying to say here is that calm dollars are probably a relative strength trade against the dollar versus the majors this week, simply because the risk flows should be relatively positive, and the yield still makes them much more attractive than anything else out there. But very, very tight trade. And I do think that if it climbs back up to 80, we have this triple top formation possibility. So I certainly want to be shorting it against there, unless we just see capitulation of the dollar, unless we have fresh, idiotic crises coming out of Washington D.C. Then more and more faith gets lost in the dollar. Kiwi dollar, similar kind of a pattern here, and you see the 72 really held well as we said they would. But coming up against the 74, it becomes a much higher and a tougher road to hoe. Oil really had a nice big bounce. Look at that, a 3.4% bounce on Friday. That certainly helped dollar CAD. Dollar CAD of all the calm dollars, still looks relatively good on a relative strength basis. This, we made the move, as we said, 24 was the support. We made the move all the way to 28, which was let me just sort of show this to you because it's really kind of fascinating. So here it is. Look at the charts here. This is former support, now becomes current resistance, and it really kind of failed right. Just textbook fail right in front of the current resistance. Now we're moving back. Very much likely when you're looking at this thing that it's probably going to bottom out at 25 and then rise back up. So it means the oil rally sort of peters out at the 50 level, and dollar CAD starts to go back up. So to me, dollar CAD is very much a buy down trade and stop out below 24. If you're a scale down buyer, what you're betting on is a higher low, which is very likely what's going to happen. So we're going to, if it comes down a little bit more, it's going to eventually form a base here, create a higher low, and then come back and try to retest the 28s. That's the better technical formation, in my opinion, than trying to short this thing into the lows, hoping that it's going to crash. Because I don't think that's very likely as we go forward. There just isn't enough angst in a dollar at this point. And of course, you never know. New events could happen. If new events come in to threaten the stability of the dollar, all of this analysis goes out the window. But given the conditions that we're at now, given the economic calendar in front of us, and given the risks here, to me the risks are here much more for a short covering rally in a dollar, which creates a buying opportunity here for a higher low in the dollar CAD. So that's pretty much how everything sets up. I'm essentially relative strength favorite of all the calm dollars against the majors, but still very much corrective move against the dollar in the overall scheme of things. Wish you guys the best luck, the best trading. Boris, over and out.